Personally, I always like to start with what I am most bullish on, where I'm investing. Um, First and foremost, gold, and I'll explain the reasons for each, copper, and uranium. Um, this has been a situation that's been developing for uranium. It's certainly taken a long time, but we're finally there, and I'll explain what's going on there. It seems like a stealthy bull market to some compared to the 2006, 2007 run we had, which kind of started with a bang, ended in a whimper very quickly. This is very different. This is a long-term market, and you'll see how that's going to play out. So let's go back to gold. I'll take these in order. What I see for gold, we haven't gotten the love in our junior mining space, and gold certainly hasn't gotten the love either. The gold mining stocks have been out of favor, but I think that's all about to change. The spring that has been wound tighter and tighter and tighter is about to explode, and I'll go into a little bit more about that. But what is coming, in my view, and this is not far away, this is coming very soon. What is coming will be much higher gold price and a much longer duration for that gold price than most investors think or understand. How high? Crazy high. Okay, we don't want that. I don't want to see that. That's trouble. That's bad news for all of us, because then life as we've known it and our standard of living is going to change. It's going into the stratosphere. The precious metal prices, I believe this is where they're finally going to have their moment. We've known this moment was coming, but it certainly took a lot longer than I thought. And why is that going to be? Because of the chaos and confusion that's coming with currency markets and this situation with the BRIC nations now starting to get real momentum and competing against the dollar and the Federal Reserve and the Bank of England. The Great Reset. I've talked about that at this conference several years ago. People thought I was a nutcase for talking about that. And now everyone kind of realizes that that's almost inevitable at this point. And that's where the CBDC, governed by a social credit score, comes into play, which we should be fighting against tooth and nail, in my view. The Fed did leak out just in a recent meeting a few weeks ago. It wasn't really public news, but people that attended the meeting leaked it out that the Fed now is talking for their CBDC to be rolled out within the next 12 to 24 months. Given the circumstances in the currency situation, they may hope that it may have to be sooner rather than later. We'll see. So gold, according to the BIS, the Bank of International Settlements, which is, in my view, the head of the beast of the system, what I call the powers that shouldn't be in the world. They run the world. And the BIS in Switzerland is the central bank to the central bank. So when the Fed or the Bank of England or any central bank in the world gets in trouble, they go to the BIS. And last year, of course, the BIS labeled gold as a tier 1 asset. That's a big deal. That's a huge deal. And suddenly, as soon as they announced that, guess what happened? All the big boys started buying large quantities of physical gold, which is what we've been seeing. The big drawdowns on the COMEX about several months ago, there was 60 million ounces of gold taken off the COMEX, which that was a real signal that something's going on, right? You see in the last year that, there's over 1.4 metric tons of gold that's been purchased by the big central banks, the countries like particularly Russia, China, the BRIC nations, and others. And since gold's a tier 1 asset, that's essentially money. That's the ultimate form of money. These drawdowns on the COMEX, just recently, the silver has had huge drawdowns this last week. And this is a concern because the warehouse receipts, David was talking about some of this, the warehouse receipts that exist, the people who have claim to the so-called COMEX gold inventories, there's way more receipts than there are physical ounces. And with these kind of drawdowns, what that means is we're coming to a silver short squeeze. Now, I've been a believer in silver. I've been a long-suffering silver holder, physical metal silver stocks, where it always looks like it's on the come. Gold has performed well, but silver lags. But I think the moment it's going to catch up is finally here. I think you're going to see a silver squeeze that is going to make silver go parabolic, and it'll slice through the $50 ceiling that we've had since 1980. It's the only commodity that has not exceeded its 1980 inflationary high, which is insane, right? Every other commodity has long ago surpassed its old 1980 high. Why is that? Well, because silver is manipulated and suppressed. And, GATA proved that point years and years ago. But, look at JP Morgan. They got a $950 million slap on the hand for interfering and manipulating on the COMEX, right? It's like swatting flies, for those guys. Anyway, the BRIC nations, what we're seeing, this change, this sudden strength of all these new countries joining the BRICS, even Mexico now has joined the BRICS. They're doing all the right things for the right reason. They have a new currency. They're backing it with gold to some degree. They're doing the right things. And the old system is failing, right? And so you're going to see, I think, a changeover here at some point. So, we just, the CBDC will have a backing in gold as well to compete with that the BRIC nations currency, which is gaining more and more strength. People are trading oil in other currencies than dollars now. The petrodollar's dropping like a rock. Just in the last few months, it looks like there's been a 20% decrease in the purchasing in dollars of oil around the planet. That's a huge deal, and I'll explain a little bit later why. Copper. I love copper because the red metal is the basic building block of society. I see a much higher copper prices as a supply and demand situation moves more and more out of balance. Possibly I could see a $10 copper price. It's already over $4, and I think it's not out of the question that we could see $10 copper or more, because supply, when there's supply shortfalls, watch what happens, and that certainly is coming in with copper. So what's interesting that I've been really trying to focus on, and I'm really paying attention to, exploration companies that have copper gold exposure or gold copper exposure, porphyries, in good jurisdictions, right? I have several companies in my portfolio and within the newsletter that are oriented to that, because I believe that the majors who are loaded with cash, they have war chests of cash, but they're not employing it like we'd like to see. We'd like to see them coming in, helping the juniors to speed up the process of making these discoveries, but they're not. Why are they not? I had some recent conversations and understood why, because they're saying, hey, it's a bad market. Why pay for something now at a higher price when the market's going to be extended bear market? It's going to cause more problems for these juniors when then they can buy them for cents on the dollar. They may be right in some cases, but I think in most cases they're going to be proven wrong, because I think this moment is coming, and by not employing that capital, I think what we're coming to is one of these moments where all of a sudden it's like a light switch that turns on, and these guys all have to scramble and fight amongst one another to buy the quality discoveries, the new discoveries that are going to happen in the near future. And I think the biggest money is going to go into these copper gold kind of stories, especially porphyries, polymetallic, high grade, in good jurisdictions like northern BC and other places around the world. So watch that. That's a focus for me right now. Copper, gold, gold, copper. So uranium. The uranium bull market is much different, this one now, from the one we saw in 2006, where the spot price seemed to be the driver. That's no longer the case. what you want to watch is the long-term contract price of uranium, not the spot price. People ask me, I presented that uranium is now in a bull market, but it's a stealthy bull market. It's not obvious like it was in 2006 when it just like almost overnight, the uranium stocks all went 4 or 5x, right? And the spot price kept going up. This time, the long-term contract price is gently just creeping, boom, boom, boom. It's going higher, higher, and it's going to do that for a long time. That's why this is going to be a long-term bull market for uranium. So you have time. I'm not going to take a lot of positions in uranium. I'm just going to get 3 companies, one of which is on the panel with me today, C2C Metals, and Nuclear Fuels. I think I've also presented them here at the show. They're one of my companies, and I'm looking for one more uranium company that I want to, support and recommend. But uranium is in a long-term bull market. The supply-demand situation, long-term, favors much more bullish circumstances that we're now in. It may take a little more time to really get momentum, but we're going to go there. And I think that could be sped up now that legislation in the U.S. is now on Joe Biden's desk to sign the sanctions against Russia for any uranium purchases. And that'll be interesting. That'll have a big effect, I think, on the perception, on the actual price of uranium in these long-term contracts. Interesting enough, where you can get that information, go to the Cameco website. They have a really good chart that shows the long-term contract price. And that's, if you're interested in uranium, just put that as a favorite and watch that. That's going to be the gauge that's going to show you how much and when the uranium market's really going to kick into gear. But it's a long-term bull for sure, in my view. So right now, I think you really have to ask yourself the question, are you a contrarian? Obviously, if you're here at this show, I think you are. We've been such long-suffering investors. We've made some money here and there along the way, but we're still mostly break even or underwater, and we're all hoping for the next run, and I think we're getting close. But now is the time to realign and reassess your portfolio. These extended bear markets almost demand you to keep realigning and reassessing, right? You keep having to adjust so that when that moment comes, you're not going to miss out. Buy the deals, because when the change comes, it's like a thief in the night. It just happens so quickly. And unless you're prepared ahead of time, you'll be one of the victims that you missed it. You missed the first moves, which are big, and then you're starting to buy at higher levels, and you have more risk at that point. So the smart investors are the ones that are buying, reassessing, realigning their portfolios consistently as time goes on. But I think we're finally getting to the moment where we're going to start to see we're going to start making big money again, and I'm going to explain a little bit more about that. So when the thief comes, you wake up and you're too late. During the night, while you were sleeping, the biggest gains are made. I always tell this story of a professional trader who came up to me after a talk I gave in PDAC, which was at the investor, the newsletter forum they have there, where we all got to speak for half an hour. And one year I covered why you have to be a contrarian in this business. Or you're a victim, as Rick Rule always describes, and it's so true. So I dedicated the whole half hour to it, and this really good-looking, well-dressed gentleman came up, probably in his late 40s, early 50s, came up to me and said, "Greg, could I get a copy of that?" He said, "I'm a professional trader, and I'd like to share this with all my younger traders." He said, "I think this is the most important message that anyone can hear at this conference." Right? That's how important he felt it. He said, personally, he said, "Look, it took me 14 years to learn these lessons as a professional," right? As lay investors, we all make this mistake, right? We don't train ourselves to buy when the news is bad. and we wait too long, and then all of a sudden everybody wants to buy. When the news is good, then everybody wants to pile in. The masses pile in, and they're overpaying at that point, and they have more risk. Yeah, so it is what it is, and you either learn that lesson or you don't. And I think everybody here, I know a lot of you in this room over the years. We've talked. You're seasoned investors. You've learned those lessons. It's painful, And he said, he was shocked that he couldn't figure that out. Obviously a very sharp guy running a huge fund with, lots of professional traders under his wings, with what they were doing. And, he just said, this is the most important lesson to learn in this business. So I always say, put this in green because this is where the money is. If you learn to do this, if you could learn to buy a stock within 20% of the bottom, right, and hold until you sold within 20% of the top, you would represent less than 5% of the investors. That's how hard that is to do. But I had this slide at that presentation, and he said, Greg, that's it. If people can figure that out and learn to do that, you will suddenly start making more money than you ever have at your investing, okay? So you are within the 20% bottom right now. Realign, reassess, take note, because things are about to change, and you don't want to miss it. The thief in the night is coming. The interest rate question, I keep getting this question. I've been on record now for quite a while. I said, a year ago, I said, look, the Fed is going to have a tough time lowering rates. They have to if they want to save the economy. But they can't, because now even their bogus data shows how bad the inflation truly is, right? So the general consensus, we got this U.S. election, my goodness, what a clown show we got going on, right? I mean, we got the orange orangutan against comatose Joe. I mean, we got the adult children running the asylum here. I mean, it's unbelievable. And I'm a U.S. citizen, right? Now, I don't speak badly about Canada because I'm a guest here, and I'll let you guys critique your own government, but my goodness, what's going on in the U.S. is absolutely unbelievable. The lawlessness, I don't want to even get into that. The things that we're seeing, I grew up on the East Coast, spent a lot of time in New York City, Philadelphia, suburb areas, and, these videos of thieves walking in with bags into the grocery store, loading up, and as they walk out, they stare down the clerk like, screw you, I'm doing this and I'm not paying, and you can't do anything about it. Like, what? That lawlessness can't be sustained. That's problems, right? Big problems. Anyway, I just this last thing I want to talk about, the U.S. hegemony is finally ripe for collapse after 50 years of no consequences. How did we get away with this? I'll tell you why. Henry Kissinger brokered a deal in the early 70s after Richard Nixon took us off the gold standard. Wouldn't allow anybody to trade in their dollars for gold. They shut the gold window because they didn't have enough gold to cover. That was the truth of the matter, right? And when history is written, they'll look back and go, wow, these people lost their minds with all this deficit spending. What happened? Well, they'll go back to the Richard Nixon announcement in August 1971, I think it was, when he did that. And they'll go, this was the start of the real problem. But Henry Kissinger came a couple years later and brokered this deal with the Saudis that said, okay, you need military protection. We'll protect you, but you have to price all your oil in U.S. dollars. And then after you get all those U.S. dollars, you have to buy U.S. T-bills. Talk about a coup that gave America a standard of living far beyond what it really deserved, especially since we were deficit spending ourselves into oblivion as fast as we could. And we got away with it. If any other country did that, they'd have immediate consequences, right? We see all the examples, right? But we got away with it because foreigners had to hold our dollars. We exported the inflation. Now that game is over, and we're seeing the consequence of that. Anyway, I'll let that go. I just want to let everybody know that I think we're coming to a moment. I hate to say this. I love the good life. We're not coming to a gently rising gold price anymore. We're coming to a spike in these precious metal prices. That means trouble, terrible trouble, chaos and confusion like we've never seen. I'm not a purveyor of bad news. I'm sad about it. I love my young people, and I got grandkids now. I want to see the good life for them too. But I'm telling you, we're coming to a real moment of trouble here. Own the physical metals, own the gold stocks, copper, gold. We're going to make a lot of money. The greatest wealth transfer ever known in the history of the world is going to happen at this moment as the world wakes up, and there you're going to have to run to the precious metals. There's not enough room to receive it. It's a tiny market, as I always say. Anyway, thanks for listening.